and I'm happy to welcome our speakers to this panel to have a conversation on the latest developments on payment technology, new forms of central bank money, and how to take this forward. So for this, we have with us Nicholas Taber from the US Department of Treasury, Diana Carrasco leading the digital pound work at the Bank of England, Kevin C. Moll from Western Union, Hartwig Garrington from PaySafe, and Eli Beiruti from American Express and chair of the European Payment Institutions Federation. So thank you very much for joining us. Perhaps to kick the discussions, I would start with you, Nicholas, to give us some perspective on the latest developments at the international level, notably in the space of the G20 Roadmap. And of course, we are always interested to see and to hear how the US is looking into these objectives.
Yeah, thank you very much. And Burkhard is also perennially a very difficult act to follow. Particularly, it's the first time I've heard Heraclitus cited in a payment speech. I was going to say the G20 cross-border payments roadmap has been in existence for some time, but we've reached a bit of an inflection point related to the prioritization, and particularly the prioritization of projects that are more focused on improvements to existing payments infrastructure and improved legal, regulatory, and supervisory alignment, payment system interoperability and extension, and then data exchange and message standards, rather than some of the sort of novel projects that are more along the lines of what Burkhard described. I think there's an implicit decision that the G20 has made in prioritizing those projects as ones where we're most likely to make the most tractable, measurable, and near-term gains. This is I was, in listening to his remarks, thinking of the other often quoted line from Heraclitus in On Nature, which is that no man steps into the same river twice because the river is different and the man is different. And I think there's an implicit parallel here to some of the opportunity costs focused on the important work to develop and explore novel systems, while at the same time making progress that we think is the lowest hanging fruit, still very difficult fruit to actually achieve, around existing systems to achieve some of the quantitative goals that the G20 set. But I should back up to very briefly also just sort of describe the roadmap, which Treasury very strongly supports and is a priority for the United States. So the overarching goal of the roadmap, which I believe dates to 2020, is to improve the cost, speed, and transparency and accessibility of cross-border payments across each of the sort of primary payments channels, so wholesale, retail, and remittance payments. There was a prioritization exercise that the G20 undertook when really the vast majority of the work to sort of take stock and identify metrics for assessing process had been completed in fall 2022. And members agreed on three priority areas. I just parenthetically mentioned. There's payment system interoperability and extension, legal, regulatory, and supervisory frameworks, and then data exchange and message standards. And at the same time, they agreed to measure their progress against a set of quantitative targets, which would be achieved by 2027. There was an interim report that was delivered to the G20 and published quite recently, which showed that there's been significant and measurable progress against these goals, as well as, it should be noted, an abiding interest in the type of experimentation that was just discussed in our opening remarks, and a real desire to apply novel, promising technologies to the underlying problems. But I'd say from Treasury's part, and I can talk a little bit more about the domestic processes that we're taking forward under the president's executive order as well. On the cross-border payment space, we're really focusing our efforts on two areas where we think there's the most urgent and ready need for progress. There's improving the legal, regulatory, and supervisory alignment among jurisdictions, and reducing payment frictions that result from different data frameworks that are applicable to cross-border payments. These are not always just purely in the financial regulatory space. They may relate to privacy, AML/CFT requirements, sanctions compliance, a range of other standards that can still implicate cross-border payments information and the way that it moves across borders. So addressing those cross-cutting issues is really fundamental to reducing costs and increasing speed across both wholesale and retail payment systems and channels. And we think that focusing on these priorities, as the G20 said, is the most likely way to provide tangible results. We also think that the lessons that we learn are going to apply both to novel payment technologies and enhancements to existing payment systems. A lot of the technological advancements that jurisdictions and the private sector are exploring have the potential to really improve payments. And central bank colleagues are certainly hard at work at investing in, incorporating, experimenting with upgrades to current systems based on those technologies. But system changes alone aren't, we think, going to solve the challenges of cross-border payments, because a lot of the frictions that have gotten in the way of these access, affordability, speed goals that the G20 has identified have little to do with underlying technology. So the members of the Financial Stability Board, working with other public and private stakeholders, have really identified fragmented legal and regulatory standards as a critical obstacle to more efficient cross-border payments. They've started a task force in which Treasury participates, along with public and private sector members, to contribute analysis and share insights, including concrete places where we can take concrete action. The key element of this is also work on the application of supervisory standards to bank and non-bank payment service providers, which is another work stream that the United States is heavily invested in. Emerging technology has given rise to a lot of non-bank payment service providers and increased their role in each of the payments channels I mentioned. And it's also given rise to new entrants into the payment space. And in order to promote and support greater competition in payments, it's important to promote consistent, risk-based legal and regulatory standards across institutions as well as jurisdictions. So there's even within jurisdictions an element of that features in the G20's work. And then we also participate in the FSB's working group exploring opportunities for consistency in the scope and application of supervision across those different types of institutions. I can talk more on the data priority I mentioned briefly, but I think the thing that is probably most important to mention is the political investment that is required to make that priority a success. So delivering the goals that the G20 set out are going to require timely and sufficient commitment by governments to ease frictions that caused by restrictions on the free flow of data that apply to cross-border payments. And these include things like data localization requirements. These are really important commitments that touch on a number of different domestic and international priorities for a lot of different jurisdictions. And to enable more data to flow, not less, to support more cross-border payments, we're going to need to enable a level of transparency that also supports a higher level of automation, which brings down costs. So we're leading a technical working group in this area. There's a stock take that we published on it, but we think that this is a really important priority, and especially given the number of places where data fragmentation and data localization come up, something that's really important for both public and private sector actors to keep in mind. That's a lot, but that's my 5 minutes on the G20 payments roadmap, so I can leave it at that.
Thank you very much. Thank you very much indeed, and it was very clear, thank you. And I actually appreciate that you brought up these opportunity costs and the prioritization, and I'm sure we will come up to some of these priorities, notably on the interoperability front. And I will take on the back of these and maybe turn to you, Diana, because there's been many developments in the UK in the past few months, so taking this prioritization, perhaps, if you want, but how are you looking into the future of payments from the UK perspective?
Thank you, Andrea. From my perspective, as heading up this digital pound project, what I like to say in that aspect is that we're looking into the digital pound from two aspects. One is how we design the digital pound as a product or platform for innovation, what the thing will be, but also how it will interact with everything else that's happening in the payments landscape. It's important to be noted that we haven't made a decision yet on whether to build or not, or issue a digital pound, either for public or corporate. But given the evolution and the innovation in money and payments, and that only constant is change that we've been referring to, we believe that there's merit in further preparatory work should we want to build and launch a digital pound. That doesn't mean that a digital pound will be the only way to improve payments, or will be the only thing that will happen in the next in the short term, medium or short term future. But what it is clear is that there is the possibility, we believe, that it may be needed, right? If we look at the payments landscape for the last 10 years, we will see that, say, 11, 12 years ago, most people didn't even have a smartphone. And that's all that has happened in the last 10 years. So contactless payments, mobile payments, etc. If we think from now in 10 years' time, we still don't know what that evolution is going to be. We just know that it's going to be looking very different to what we know today. And it's in that context that we're doing the exploratory work for the digital pound in the UK.
Good. Thank you. I think with that, I will turn to our industry speakers, and perhaps starting with Kevin, because I was just thinking, we mentioned the legal requirements and the need for consistency now between the different projects ongoing during the G20. And I'm thinking, of course, Western Union operating at a global level. What are you seeing in terms of global cooperation in this space between the projects, between the jurisdictions? And if there's anything further that we should be doing within the roadmap?
Yeah, it's difficult because we operate on a large scale across dozens. I mean, over 140 jurisdictions, something like this. Probably closer to 200. But if you break it down, it's over 100 countries, and we move money between G20 and less developed. We move countries, or we move money within north to north, which is mostly developed, or even south to south, which is less developed to less developed. And I think in all our complications of how we work with our consumers, it is really led by what standards and practices we put in at the local level. And when I say level, I mean like whether it's a regional CBDC or a nation-specific CBDC, we will always interact with several different jurisdictions. And the interaction is important because it has real consumer impact. So we have things like, we may accept a payment from the sender, but it hasn't yet reached the receiver because there's another piece of work, another leg of work that needs to happen on the receive side. In some cases, AML may be being done on the send side, maybe be done on the receive side. Now, if we have a great platform to share information, to share understanding of what, who that payment is from and to, in a system that talks to each other, it doesn't necessarily, we don't have to be running the same necessary piece of software. We just need to make sure it runs in a language that can talk to each other. And so a lot of the standards don't necessarily mean that we have to have one global standard, but there should be some things around how we share information, around transparency, particularly as was mentioned around the individuals, because from a retail perspective, we have we want to make sure we control understanding who our customers are and why they're sending money, and being able to do that multiple different locations at multiple different times to really get a sense of how this whole network is operating, because you get a much better perspective when you look at the whole network than particular corridors and pieces of it, right? And I think people can find ways around, if they're looking to do illegal behaviors or illicit activity, then they will find somewhere in the system that doesn't talk to each other and take advantage of those points of either discommunication or miscommunication. And so the more we could think about it at the global level, which is hard. I mean, we're talking about so many jurisdictions and so many different pieces of legislature and so many different ways of designing it. But one way that we started to look into this in a more practical sense was to work with a partner in the Philippines. And we published a paper on this, you could see it, around what a retail CBDC looks like when it interacts across two different national lines. Now, the hypothesis that we had, or at least the way we set up the experiment, was to speak to each other on the same DLT. So the foundational layer and ledger technology was the same. So we agreed to that. But everything above that, in terms of how we understood onboarding customers on the receive side, on the send side, and how we onboarded receivers, let's say in the Philippine side, because that's where most of the money is flowing in that direction, is still within our current processes and procedures of AML, KYC, CFTs, and all those other reporting and other insight functions that we have and have built up over years. It's hard to just rip and replace those functions or those types of systems with this new blockchain system. But what we found was that the transfer, at least of value within DLT, was pretty much instant, as you can imagine. It also allowed us to keep an understanding of what was happening on the receive side and whether or not that had actually been credited to an account. So I mentioned how we may have an idea that money was sent on the send side, but we don't know if that money was accepted on the receive side. In this case, we had full end-to-end transparency of that transfer of value actually happening and hitting an account that was open, right? In a lot of the cases, we may not have visibility in real time as to whether or not an account is open, or an account was flagged. And so how do we communicate to our customers when the payment is kind of sitting in limbo? It's really hard, because unless we have that transparency, we don't know what to tell them. We tell them, oh, it's on hold, or it's pending further review. If you're talking about sending your salary back to your loved ones in Philippines, this is not a very reassuring message. So I love the ability to actually have a real-time transparency in a language that we can understand with our various institutions that we interact with, some 5,000 banks around the world and some 500,000 agents that exist at the retail level and in each of these 140 plus countries. That's the struggle that we as a company holistically are trying to solve with. But we welcome the advancements that are taking place within the G20 and elsewhere, because it's advancing the discussion. And I think I've seen something recently within the EU around how we take into account different jurisdictions around cross-border payments and standards. And so that's one thing we're trying to solve for.
Good. That's very interesting. And I'm actually very happy you brought up the kind of AML and transparency, because you can't really talk about payments without talking about AML. And it's true that the FATF workstream is quite an important one. And I know, Hartwig, you're very involved into these, so with the FATF work on this front. So maybe I turn to you for some thoughts on what else could we improve looking at the FATF work within the G20 roadmap.
Yeah, thank you. And good afternoon, good morning, everyone who is listening to this last panel. Great to be here and in virtually here today, and hopefully next year in person again. Look, I think the what was just described by Nick earlier in his remarks. I mean, it is really spot on what the G20 is trying to solve, and yet. I mean, in particular, when you look at the cross-border context from areas as Kevin mentioned, I mean, where maybe purchase power is lower. I mean, we are looking at not so much from a remittance perspective as PaySafe, but as a global payment service provider, also offering, let's say, digital wallet products, for example, also including cash-funded solutions. So we are, offering our services in a number of regions, let's say. Across Europe, the US, and LATAM with our core focus. And if you look at how people make payments there for also online purchases, for example, the traditional ways of paying are difficult from an economic perspective, let's say, because as was mentioned, I mean, the costs of transfers in the current system, in particular when you look at SWIFT and a number of banks, for example, being involved. It takes a long time. You have no visibility on the actual status of your payment, and given that there is a lot of AML compliance in the each bank that is involved in the flow of the transaction, the costs are also very high of those transactions. And if you look at people with a lower purchase power, for example, I mean, the transaction size may be smaller, and therefore also the costs in relation to these transactions, which typically are not, I mean, there is a minimum cost for these international transactions, may become prohibitively high. So this is why we see a huge, in a way, take up of the fintech offerings that we offer, but I'm pretty sure some of our competitors as well, which actually say, well, you enable the one international transfer, maybe for to top up a digital wallet account, and then customers can actually transfer from there at very low or sometimes even zero cost when it comes to maybe merchant payments for goods and services. So I think there are, if we summarize the current sector, we are in a way, it seems that G20 is focusing on the traditional banking sector, but yet there is a more kind of fintech sector, digital transformational in a way that also has already solutions in the market at the moment, and there is a big take up of those as well. So I think when you ask about the work that is currently done from the FATF, I mean, obviously this is a topic that needs to be addressed in one way or another by the FATF as a global standard setting body. And there's ongoing work on recommendation 16 for the travel rule. And I think, I think the industry as such is not against having a good, let's say, clear framework of rules in relation to, these more innovative ways of moving funds. Because obviously, if you have a digital wallet account, the idea is not that you replicate every transaction that you process in a digital wallet account in the underlying banking system, because the efficiency of those transactions is actually coming from having pools of money, of funds, client funds in various jurisdictions, and actually rather than processing international transactions, rather localize these kind of international transactions by actually having local bank accounts and making those payments locally. And yet, so this means that eventually, if you look at the underlying bank transfers, the transfer of funds that is actually happening within the layer of the digital wallet account is not fully reflected and cannot be reflected and should not be reflected in the traditional banking system, because otherwise we would again end up in the same struggle and the same type of cost problem that we currently have. So I think when we look at now this kind of new proposal, or it actually, I'm not sure if there is a final proposal yet by the FATF, but I think the point I'd like to make is that we need to be careful try not to replicate the model that we currently have in terms of the money and the information flow, which causes also problems, from an API, and it was mentioned privacy and legal perspective, but which is a little bit based on the idea that actually banks are the gatekeepers of the financial system, and acknowledge that there are new players in the market which themselves actually are gatekeepers of the financial system, and actually take the AML requirements and all the due diligence requirements, as Kevin described. We want to understand what our clients are doing, and Western Union does exactly the same. So we want to take this very seriously, but there is a risk that if we get this kind of recommendation 16 on the travel rule wrong, that we would actually end up in a situation where the banks again feel that there is an elevated due diligence burden on them to understand what all the underlying transactions are actually for. So I think the call here is to put the traditional banking sector and the new fintech sector at the same level, and simply acknowledge that when you are playing in this space of global payments, that actually these companies are themselves responsible for the compliance requirements. So I hope that kind of gives it a little bit of background. It's a quite complex topic, but I think this is maybe the right forum to discuss it.
It is quite complex, Hartwig, but I think you explained it quite well. So thank you very much for that. And I would like to turn now into the EU perspective, and I would call on Eli for that and his expertise. So we, of course, have a very exciting year for payments going on at the moment. So we have the implementation of the Instant Payments Regulation. We also have the revision of the Payment Services Directive. So I would like to see, Eli, from your perspective, how does this fit with the international developments?
Thank you very much for the invitation. And I'm really glad, to be part of this event. And as Hartwig said, I really hope that, next year we can all be in person again and have, the discussions all together. So to answer a bit your perspective, I would like to focus maybe my intervention a bit on the digital euro and on, this particular CBDC from the EU perspective. We've all heard, I think, before this panel, it was extremely timely, what Burgard, was sharing with us with regards, to the importance of the digital euro, why this is strategic for the EU. I'm here representing EPIF, the European Payments Institutions Federation. And, the members of EPIF are the innovative players in the market coming from the non-banking sector, coming, to try to propose services, to be challenging, the banks and trying really to offer consumers, a different perspective and a different way of interacting. And so we do believe as EPIF in the importance, and we are supportive actually of the digital euro as a project. We believe this is really very important. There are, however, certain things that need to be addressed, before the digital euro becomes a reality in a few years in the market. And we need, to raise these issues right now, and we want, these to be addressed right now by regulators and policymakers, because, we're afraid that if we continue down the road and, the way we are going right now, this might be problematic then, for us to compete in the market, and I'll explain why. So I would like to focus mainly on three items. So the first one would be really support to this project from the PI perspective, from the payment institutions, because we believe this is something that we need to embrace as a development that is happening, I think, across the globe, and this is something we've heard from different speakers, how they are focused on making payments cheaper, quicker, faster. I think CBDCs have the potential of addressing some of these challenges. So I think this is something to be followed very, very closely. So we're definitely very supportive. The second point I would like to make is this issue that those of you who followed the European Central Bank's proposal, it's mainly on the wallets and how many wallets should a citizen have. As most of you would know here on the call, in the ECB mindset, there should be a limit of how much a consumer can hold in her or his digital euro wallet. And so based on this, at least in the mindset of the ECB, they wanted to have only one wallet that every citizen would have, so one wallet per citizen. And for us, this would be really, really problematic as payment institutions, because we would like, to give consumers the choice to choose, amongst different providers, different wallets. So we would definitely support a multi-wallet approach, which from our perspective would be very favorable to competition and would make actually different players innovate around the digital euro and really make it a success, which I think is in the interest of the whole ecosystem. So this is a key point that the European Commission in its draft proposal has embraced, and we really hope that this would make it, to the end of the legislative process, and that also, the ECB will then, embrace this approach, because it is definitely the most successful one if it is taken on board. Last but not least, I would like to focus on the compensation model, which is very, very important, I think, when we talk about the digital euro, for two main reasons. The first one is that, again, it is one thing to design whatever CBDC we want. Digital euro could be really nice, but if it is not really embraced by consumers, if consumers are not really adopting and using the digital euro to pay, then it will be, a failure for everyone. So I think the biggest challenge is really to have adoption by consumers. And when we talk adoption, we need to make sure that, the different, I would say, parties and players offering or distributing the digital euro and innovating around it have, the right incentives to do so. And by having really the right incentives, this means you need, a compensation model that is fair. And the approach that is proposed right now seems for us, a bit too fast. And I'll explain what I mean by that. So the solution that is currently proposed by the European Commission, and it seems the EC, also the European Bank, is not far from the thinking of the Commission. It is based on regulation in a way. It's really limiting, capping a bit, what the distributor get or not get. And this is a bit similar to what we see in the area of cards in the interchange fee regulation with the caps that we know. So the model that is being put in place is very similar to this. We believe, like in the case of the interchange fee regulation, this didn't, happen from one day to another. This was, the result of many years of investigations, of a market that from the perspective of the institutions were not, working properly, and then they imposed caps. But in a new project, to start imposing a cap while, time hasn't been given to the different, I would say, parties to agree and find a way to function, we believe this would be an error to start there, especially that price regulations should remain, economically speaking, the exception and not the rule. And this is something that is really important for us to make this project a success.
Good. Thank you very much, Ali. And I think you have indeed already precluded some of the next topics we were going to touch upon, which was be on the CBDCs front. And for that, I start with you, Diana, simply because last week I think we all read with interest the response from the bank and the HMT to the consultation on the digital pound. So I would be keen to hear how kind of, if you could walk us through these and how you're looking at the benefits and risks, and of course feel free to react to some of the points that Ellie mentioned in the digital euro, I understand, but in parallel.
Yeah, so thank you, Andrea. So as you all probably are aware of, last year in February, we published a public consultation on the digital pound that was part of the first phase of the digital euro, the digital pound project. Sorry. Last week we published the response, as you said. So I think this is the first time I'm talking about it. We received about 50,000 responses, over 50,000 responses actually, which is it's unprecedented. It's the largest response to any public consultation we've ever had. Responses came from consumers, private firms, academics, industry associations, civil society groups, so from anywhere across the country. Similar to what Ellie has said, people had their concerns because that's what they need to have at this stage, because we don't know yet how we're going to be designing the digital pound, and it's natural that people have these questions that are relevant for them. The three key topics that the questions or concerns or challenges were about were different from Ellie's, were mostly around first, privacy, second, programmability or control, and third one would be access to cash. So in that response, we've addressed those concerns. And first, we've said that before any launch, the government has committed to introduce primary legislation. That means that the Parliament in the UK must pass that legislation. So it will be a democratic process. And a further consultation exercise will be held prior to the introduction of that legislation. On the topic of access to cash, the government has already legislated to safeguard access to cash. That means that we will make sure that it will remain available even if a digital pound was launched. On the aspect of government programmability, we've said that will be a core design feature, and that legislation would be introduced by the government to guarantee that. And on the issue of privacy, which seemed to be the one that attracted more concerns or more questions around, that obviously will also be a core design feature of the digital pound. We have guaranteed that the government and the Bank of England will not access users' personal data. Note that the digital pound is based on what we call the platform model. So the Bank of England will be providing the platform or the infrastructure on which the private industry will come and develop the different tools, both for consumers and businesses, to make and take digital payments, so digital pound payments. So that will mean that the Bank of England and the government will not have the direct contact with the final user. So the platform model itself already gets the first step of that control and around privacy. We've also said that there will be legislation introduced by the government to guarantee users' privacy, to guarantee that the government and the bank will not have access to personal data. And we're also exploring, as part of the phase where we are now, tech options to prevent the Bank of England from accessing any personal data through our core infrastructure. That's the kind of the main summary of the response paper. In the digital plan, we're now in what we call the design phase, which is the phase 2 of the project. This will be lasting for 2 to 3 years. In this phase, we will be developing a conceptual architecture that could be used as a blueprint for a digital pound. We'll be conducting experimentation and proof of concepts in collaboration with private industry innovators, and we'll continue engaging with the stakeholders across society, which as part of what we call the national conversation. We've got 3 big groups for engagement. We've got a CBDC engagement forum, which is members from the industry and civil society. We've got a CBDC technology forum, which with technical specialists, and we've got a CBDC academic advisory group. And we've got different working groups that are subsets of these forums that will be looking into different aspects, including some of what Ellie has mentioned as well, and the concerns from all the different ranges of the potential users and intermediaries, right? From the institutions that will be providing the wallets or the services to merchants, to the consumers, banks, fintechs, associations of businesses, small businesses, large businesses, etc., right? And in this design phase, the last piece that we will be doing is conducting an assessment of costs and benefits of the digital pound. On completion of this phase, which will be around the middle of the decade, the bank and the government will decide whether to proceed to build a digital pound, and this will never happen before the second half of the decade. So we're looking at sort of 8 to 10 years now if we were to launch a digital pound. But as I said at the beginning, no decision has been made yet. We just think that there's further merit in exploring this as a possibility, and just learn about the industry, the needs in the industry, whether there are gaps. That we were saying at the beginning of the panel, and it was the keynote speech as well, that change is the only constant, and understanding and trying to anticipate what will be needed in a decade's time in the payments system in the UK.
Thank you. That's interesting. So, I mean, in the Eurozone, we've also started what we call the phase 2, the realization phase of the digital euro in October last year. A big part of that is actually, so you have the policy work, but you also have the rulebook development, which I'm assuming would be the equivalent of the different working groups you have as well in the UK. And I do know, Ellie, Harthwick, actually, apologies. You are very active on the rulebook development. And I was just wondering, how do you see the work in the rulebook, and how is perhaps addressing some of the concerns that both Diana and Ellie just mentioned, about the multiple wallets, access, privacy?
Yeah, thank you for the question. I think these are the hot topics, right? So privacy is one of the key topics, I guess, and well, I mean, obviously there is a lot of data that needs to be collected because of the design of a central bank issued digital coin and or digital currency. And I think, I mean, when we look at it in the wider context of what we are discussing here around, cross-border payments, I mean, Ellie said, I think, it could address some of the concerns, and that is maybe the obvious thing people would look at. And yet, I think well, at least for Europe and for the digital euro, in particular, we are taking a very, very conservative approach to start with. And the question is, why would we not take a more, I mean, in a way, forward-looking approach? Because as Diana nicely described it, I mean, she was speaking in decades. I mean, like, I don't know when I last used the word decade, because it feels such a long time frame that we talk about, how many months. Next quarter is already far away, and now we're talking about decades. It's a long time. And so the question is really, why is there such a rush? But I mean, given the rush that we are all in, or seem to be all in for the race of the first CBDC. I'm not sure we are all always making fully the right choices, but I mean, to err on the side of caution, we are staying at the very, very conservative side. And maybe the answer also why this is the case is partly the rush, but also partly the underlying goal with all the, you know, the things that were said is basically, you know, you want to create the autonomy and keep the autonomy for Europe in terms of, you know, having and owning its own payment system in a way. So this seems to be the underlying goal, and as part of that, you need to make some concessions to functionality. And one of them is, I mean, you know, you need to actually set up a scheme, and the scheme needs controlled in a certain way. And data need to flow through the scheme, because otherwise you wouldn't know how many people actually have a wallet. If it's one, if it's two, if it's three wallets, it just doesn't really matter, because you in any case need to know Hartwig has, you know, a wallet. Maybe you don't have access to the data, and maybe you have a strong political commitment that you don't want to see the data, but the data is there, and this is what makes it hard to compare with cash at the moment. And this is maybe where some of the discomfort comes from. But I think we all believe that the privacy points can be addressed. But what stays is actually a very limited functionality of what we see. It's basically another way of executing bank-to-bank transactions. It just doesn't go through the SWIFT system. It just goes through the Euro scheme, and that is in a way also the reason why it cannot be used for any cross-border payments. I mean, the Burkhard Balz said it. I mean, it will be the Euro area, and in order to participate, you need to be, you know, have an account and be a payment institution, you know, that is established in the Euro area. So it doesn't even include other parts of Europe at the moment, and then it's hard to imagine that this would ever go beyond well, anywhere near cross-border payments. And at the same time, this is the interesting thing, we are creating the framework for the private sector to come up with very stable, reliable, you know, stable coins that are in a way overseen by European regulators, which actually can come with all the functionalities that we like, right? So you can make it programmable, you can make you can think of all sorts of fancy functionalities that actually would make the European issued stable coins give them the advantage, maybe the first mover advantage, if that was mentioned earlier. So I think, you know, it's an interesting time at the moment when you have a very conservative kind of ECB working on a digital euro, but I think maybe with an underlying different goal. And then at the same time, the private sector gets the tools and means and the regulatory framework, which gives credibility and trust to what, you know, the stable coins that are issued out of the European market. So maybe that, I'm not sure if that addresses your question, but that at least was the point I wanted to make.
Oh, that's all right. Thank you very much, Hartwig. But I think with that, perhaps passing to Kevin, because we are now focusing a bit on the CBDC side. But I wanted to go back to these opportunity costs that was mentioning in the beginning by Nicholas, because we have these CBDC projects on the public money side. We also have many developments on the digital currencies. And Kevin, with you working on these digital currencies, do you see here some kind of a complementary? How do you see the coexistence between the two, in fact? I believe you're on mute.
Sorry, can you hear me now?
You can hear it, yes.
We prefer to give our customers options, because we don't think there's going to be any one that rules the space. So I feel right now we are exploring many different avenues, because we don't know. I think it's going to be the private stablecoins is, you know, they're out there. They're going to be regulated, which means that I think they're going to come into a more of a formal environment, regulatory environment, where they can exist and coexist maybe side by side. And so for us, we're not trying to pick a winner. There's probably thoughts around whether Western Union could come up with its own stablecoin, given that we operate in so many countries and we move a lot of funds. But that for us is not, it's not adding, if anything is adding complexity, it's not simplifying this for our customers who ultimately at the end of the day deal with local fiat, sometimes in card forms, sometimes in cash forms. So trying to throw another thing into the mix is just not, it doesn't do any good. And so what we want to understand is how are consumers using these. We did a survey of our consumers and said, okay, do you know what a cryptocurrency is? Have you bought cryptocurrency? And what we've learned across 15,000 respondents in both US and Europe, in that our customers are disproportionately at a greater rate purchased cryptocurrency than the broader population, which is interesting. I wasn't aware of that amongst our consumer base, but what we're finding is that it's very high when customers are moving to new countries for the first time. And maybe they're finding use of cryptocurrency to hedge inflation in their country, whereas in other countries it's more speculative. In some countries, maybe stablecoin is actually used for payments, but I would say that there's something there that our customers are showing, that there is an appetite for it. It's not a huge appetite, so it's not something that's going to, for us, we need to get launched and put into market right away, as much as we want to be careful and do it in the right way. But there is an interest, and we'll be open to whatever those interests lie in terms of stablecoin, CBDC, or whatever iteration of those two comes to bear.
Perfect, thank you. And I wanted to, before we close, just I'll come to Ellie and then Nicholas to conclude with you. I do want to come to you to one point. But on Ellie, Kevin started this kind of response now, talking about choice. And I wanted to see, looking at the European agenda here, digital euro or others, how do you see, what more can we do to actually enhance choice and innovation in the European market? If you have any thoughts on that.
Thank you, Andrea. Well, let me say, I have the impression sometimes that we have too many choices. Let me put it this way. And I'm saying this because, when you look at very recently, all the different, I would say, ways that consumers can pay, think about, well, definitely cash is there. Think about the cards. Think about, the credit transfers, the direct debits. Then we had the instant payments. Let's not forget about all the TPPs and all the services that are possible. Then digital euro very soon. So I don't think we're lacking, choice in the EU, to be honest. I think, and that's very good for consumers, because I believe like that's very good. But I don't believe there is a problem of choice, at least in this part of the world. This could be different, when you look at maybe different continents, and then what offers consumers have. But I think in the EU itself, we do have a lot of choice. We have the speed, I think, again, now with instant payments becoming the new normal already, and then being generalized also very soon. I believe, and that's something, that the institutions repeat the whole time, that the whole world looks at the EU when it comes to payments regulation. And I tend to agree with that statement, especially when you compare what we have here to other regions around the world. Now the question is, what can the institutions do to have more choice? For me, it's now you need more stability. You need a regime that is really like more stable and to let innovation thrive. So that's probably what is happening now with, well, PSD3, PSR, the Payment Services Regulation, the Payment Services Directive number 3. So that's already like very good for choice. Then we have the FIDA. So again, we're talking open finance. That's again providing another set of rules to really foster innovation. So with the digital euro coming also on top of that, I think consumers in the EU will be very happy. They will have many choices to pay, but now it's time, to make sure competition is also there to allow a safe innovation.
Good. Thank you, Ellie. And And now to conclude, Nicholas, I turn to you. There is one thing actually I wanted to discuss with you. So now we're talking about CBDC projects, which in a way is some public intervention in this space, but there's other things that regulators and policymakers can do to enhance innovation. So that's my question, what else can policymakers do beyond the CBDC intervention?
Yeah, I think it's an apt question that also implicates a bunch of the comments that were just made. And I think the interesting point across a couple of them is that innovation is occurring right now. And the key is to ensure that innovation happens in a way that reflects safety and soundness of the institutions that are pursuing it, that fosters broader financial stability and other sort of core central bank priorities, as well as broader policy priorities of public institutions. And I mean, there's a comment that was made a moment ago that, the first job of policymakers is really to set the rules of the road, that while these public projects are being pursued, they're still foster responsible, broadly equitable financial innovation, so that innovators can experiment, they can take risks in a way that's responsible, and they can develop products and services that are going to bring value to the economies where they operate, also make sure that the innovations themselves are not causing harm or just disrupting those other broader goals. The second observation is just, I think we've heard across a couple of the projects, the central bank digital currency and other payment system experimentation is immensely complicated. It's very resource intensive as well, both in terms of people and finances and time. I'll take the sort of look in the mirror example of this is exactly how long it took for the FedNow product, through really extensive public consultation, industry consultation, product development, alpha testing, beta testing, client onboarding, to actually get to the point where it was processing live transactions was on the roadmap of years. And so it's particularly important for policymakers as well as stakeholders elsewhere in the public and private sectors to sustain political momentum behind making the sort of tough decisions and investments that are necessary to make these projects succeed. Otherwise, they're likely to languish or stop halfway. And so really sustaining that momentum is something that policymakers can also work to do. And then the third thing I was going to note is really being clear on the problems that a project is aiming to solve. And I mean, they're preserving safe and sound private sector innovation, enabling is maybe different from enabling cross-border payments. There was a mention of strategic autonomy in Burkhardt's remarks about ensuring sort of resilience to foreign domiciled systems or interruptions of services, which is perhaps a different goal as well from promoting economic competitiveness. And making sure that the projects in question are actually speaking to the policy goals that are in turn accountable to the public is a complicated task that implicates the other two as well. And that can range from core central bank responsibilities around, for example, monetary policy innovation and financial stability, to broader priorities around privacy and financial inclusion, and a reflection of sort of national security priorities as well. We mentioned AML/CFT and sanctions a couple of times in this call. So also making sure in consultation with stakeholders and with the public at large that the project is speaking to the right aims, and that those aims are supported through political support. I think is also something that we as policymakers can try and make sure we continually do.
Thank you very much, Nicholas. And of course, thank you to all of our other speakers. So Diana, Hartwig, Kevin, and Nelly.